Settle your debt for pennies on the dollar. Almost every TV station and radio station is bombarding you with commercials promising to settle your debt for less. But can you actually do it? The old saying is, if something sounds too good to be true, it probably is. Think about it. If everybody could settle their debt with the IRS, nobody would be paying any taxes. So what is the fuss all about? It's called offer in compromise. No matter what the commercial says, not everybody qualifies for an offer. Let's look at some basics. You can't have any missing returns, and you have to be current on your estimated tax payments if you're required to make them. So if you haven't filed in a few years, go file those returns first. And if you're not up to date on current year taxes, chances are your offer is going to be returned without any consideration. I always get the question, what is a good number to offer to the IRS? It doesn't work that way. There is no magical number or percentage of your debt you can offer to the IRS to have a higher chance of acceptance. The IRS looks at your income, your expenses, and the equity in your assets to calculate the offer amount. So you have your income and your expenses. Whatever's left over is disposable income that is used to calculate the offer amount. It's also used to calculate your future collection potential. Now, just because you have expenses, it doesn't mean that they will allow them all. They follow national standards to decide what's allowable. Logically, they will not settle with you so you can continue living your lavish lifestyle. They also look at all your assets, meaning your house, your car, your boat, your RV, your bank accounts, your retirement account, anything really that you own. If you have any skeletons in the closet, they will find them. So it's not good to try not to disclose everything that you own. They look at the fair market value of these assets and the loans you have against them. Again, anything left over is equity in assets, which is thrown in the calculation of the offer amount. So the question is, why should the IRS settle if they don't have to? The answer is, they don't. If they think that your disposable income is high enough where they can collect your entire tax bill within the course of several years, within the statute, they will not settle in an offer. They'll offer you an installment agreement. Similarly, if you have equity in your assets where you can either full pay your tax bill or substantially bring it down, then they will ask you to tap into that equity first. To qualify for an offer, they truly have to believe that you don't have any ability to pay your tax bill in foreseeable future, or if they ask you to full pay it, it would cause you economic hardship, or it would be unfair and inequitable. So as you can see, offer is a serious matter of mathematical calculation. None of us has a magic wand that makes that offer happen. In 2014, only 40% of the submitted offers were actually accepted. It's not because the IRS is hard-headed. The truth is, tax debt relief is a lucrative business, and a lot of unethical companies will submit an offer on your behalf, even though you're not an offer candidate. Why? They can charge you high retainer fees. So always be careful who you choose to represent you before the IRS. For more questions about offers in compromise, email me via Contact Us page on our website at harpertaxsolutions.com. Email me directly at info@harpertaxsolutions.com. And please subscribe to my channel for more tax debt relief help.